What's up? This is video number 1 of trend following secrets, where we're going to go over how to actually read a chart. So like candles, trend lines, all that good stuff. So again, let's just jump in and start getting into it. So again, this is a stock chart. You can find these anywhere. So this is tradingview.com. If you want to use this one, it's free. You can also go to yahoofinance.com. You can use the broker that you use to buy and sell stocks. They should all have charts as well. So again, all stock platforms will typically have a stock chart. So what you want to do is you just want to like open up the full edition stock chart and kind of get an overview of what's going on. So again, as we can see here, we have price on the Y axis, and then we have the date or time on the X axis. So again, going across here, this is what the stock has done throughout its history. This is where the price of the stock has moved. You can see here the stock was lower back in early 2020, and now it's higher back in late 2021. So you can see that it's growing overall. The candles that you see here at the bottom, these lines, this is called the volume. This shows how many shares are being traded, and this is just an overview of what a stock chart is. Again, I'm not going to go too much into it because I hope you guys know this already, but if not, you can definitely check out one of the masterclass videos to learn more about reading a chart, but I'm going to jump into it from a trend following perspective. Okay, so again, there are two different types of trends in the market. You have an uptrend and a downtrend. There's also a neutral, but we're going to ignore that right now. An uptrend is where your lows are getting higher over time, and your highs are also getting higher over time. When you see that, you know the stock is in an uptrend, and that means it's trending up. When a stock is trending up, that means we can draw trend lines from the bottoms and actually make a decent trend line and show that there are connections just like that. That's a trend line. Now, there can be trends inside trends. So for instance, as you can see here, the long-term trend that we're looking at right now is an uptrend. But if we zoom in, you can see here that we actually have a downtrend within this uptrend. You can see here downtrend channel right here inside this uptrend, and then guess what? We have a downtrend, we hit this line, then we uptrend, then we downtrend, then we uptrend, then we downtrend, then we uptrend. So guys, trends are in everything and in every single time frame. So I just wanted to stress that point. A trend is simply just showing you which direction the stock is going for that moment. The closer you zoom in, or the smaller of a time frame you go into, the shorter that trend will last. So again, this is a day chart. So the daily trend we have, or the trends we have marked out here, should last at least a month to 2 months, if not years. But again, if we go into a shorter time frame where there's a 1-minute chart, which means each candle represents 1 minute. So previously what you just saw is you saw where the chart went over like a whole year. This chart just shows couple days because each candle represents 1 minute. So as you can see here, there are trends, but these trends only last a day or a few minutes. You can see here an uptrend, which only lasted about 30 minutes to an hour. You can see here a downtrend that lasted only about an hour. So the shorter of a time frame you go into, the shorter that trend lasts. So what does this mean? Well, if you want to follow the trend, then you have to determine how long do you want to follow the trend. Do you want to follow it for an hour? Do you want to follow it for a year? And that's going to determine your time frame you should be on. For everyone starting off, I recommend you explore trends from a daily time frame. It's just much easier to chart these out. So anyways, getting back to it, now that we know of uptrends and downtrends and how to make trend lines, which is what this is here, by connecting the lows or connecting the highs, depending on if it's an uptrend or downtrend, now we can kind of understand more about the chart. So once we know that the trend is up, then we know that we have found a nice trending stock. If we try to connect the bottoms of all of the stock, or like of a stock, and it's just like neutral, where the line's like very flat because the stock's just going up and down over and over and over, then that's not going to make the best stock. Because again, I don't know if you've heard this yet before. I know I say it a lot, but I don't know how much you listen to me. Is that a stock's job is to make you money. So if a stock is not making you money, then you should not be holding on to that stock. And so how do we know if a stock will make us money? If we're on the daily time frame and we can chart out the lows are getting higher and higher and higher, Even if it crashes a few times, we know that long term this stock will make us money, and that's what we're looking for. So anyways, that is the basics of trend following. Going into the candle specifics, once we know we have a trend, we're looking to buy at one of two places, which is going to be either a dip buy or a breakout level. So again, if we're looking to buy the dip, then first off we want to establish our trends. As you can see here, for example, we know that we had a trend here. Now when we get to this trend line, what are we looking for to know that it's going to reverse? We're looking for a doji candle. A doji candle is something that has super long wicks. We can see here that like this candle, let's see if I can zoom in. Nope, we're going to go back. Sorry about that. You can see here that this candle has large wicks where like there's the single lines on each side, that's called the wick, long on each side, but then we have a small body, or the actual part that's actually filled in. So again, the box filled in is small, but the wicks go up quite large. And so when we have a doji candle at a support or resistance level, that is a key decision maker that we're looking for a reversal, that we're looking for the stock to change direction. So as you can see here, we came down to this level of support, we formed a doji, and we reversed. You can see the same thing to the upside, right? You can see here, when we reached a level of resistance, we formed a doji, small body, long wicks, and then we reversed to the downside. Then we're looking for the same thing here, right? We saw a doji, we saw a reversal, we saw a doji, we saw a reversal. So again, how are we looking to buy those dips? Well, specifically, we're looking for those doji candles at those trend lines that form, and that's going to help us pinpoint our dip buy opportunities. Now, if a stock is trending up, meaning that it's going from the bottom left hand to the top right hand, or we have a solid trend line pointing up, then dip buys are safe to buy regardless, but dojis give us a good entry candle to get into. Now, we're also looking to buy the breakouts as well. So when we have a trend line, we can also draw resistance points on top. And so you can see here, if we're trending up and we have a resistance point, you can see here, it got rejected here, it got rejected here, it got rejected here, and it got rejected here. Then that means that if we're trending up with a solid resistance, that means that the momentum of the trend is still up, right? The stock is trending higher, but the momentum and the energy of this move is being squeezed into a tight frame, and that means that it has to explode. So a breakout would be a stock that is trending up, hitting a resistance level multiple times, and then buying when it breaks above that resistance level. So you can see here that is a great entry point to buy into, because we have a stock that's trending higher and then we break that resistance level. So again, those are our key points of kind of reading the chart. Also getting into it a bit further is looking at the volume. Volume is going to step in large when we see a trend change and when we see a directional change. You can see here how we start dropping, and then we know that we're starting to hit that bottom because we see a lot of volume stepping up, and then we get to see that reversal. Same thing here. Same thing right here. When we went too high and we started having that selling off, the volume stepped up as well. So volume typically increases when there's a change in direction, and then it decreases when it understands and agrees with the trend. Like if it is trending up and the volume is lower than it was at the high points, and that trend is likely to continue. So again, that is kind of how you read the chart and getting into it more from a trend following perspective. So I hope that made sense. We'll deep dive more into video number 2 of exactly different type of tactics to follow the trend. But anyways, I hope this video made sense and explained more. I would recommend for your homework to go onto a trading platform, whether it be your broker, Yahoo Finance, tradingview.com, anything like that, and just pull up some charts and try mapping your resistance out, where the highs of the stock are, map out your support levels, where the lows of the stock are, and most importantly, map out your trends, see what stocks trends well and see where things bounce, and start to identify dojis. Because if you can learn to identify these small candles at support levels, you'll be able to buy in dips perfectly. All right, guys, thank you for watching. See you in video number 2.